let's get across the market open. David Lane joining us from Audmanet. David, welcome to Wednesday. Good to have you here in Sydney to join us.
Thanks, Andrew.
Let's begin what we saw overnight on global markets, rallying essentially, and a lot of that is based on the fact that the likelihood of a Fed rate cut is looking more promising, given some weak economic data out of the US.
Yes, that's right, Andrew. It was a very strong night overnight. The Dow Jones in particular was very, very strong. There are expectations from some in the market that we will see an earlier rate cut. We're not convinced that we'll necessarily see that yet, but yeah, as you said, the economic data in the US is quite weak, and it's interesting that we keep seeing the market rallying on the basis that the economic data is relatively weak.
Yeah, I know, it's odd, isn't it? Because obviously that's the reason you'd have a rate cut is because of economic weakness, but that doesn't necessarily support stocks yet. Obviously, investors are in that mode where they just want those rate cuts, don't they?
Well, absolutely, yeah. It's certainly heading in towards the end of the year. A lot of investors are looking for that Santa Claus rally and perhaps looking for any reason for it. And we also saw a fair bit of activity in the AI type stocks as well, and a bit of a rotation there. We've seen Nvidia come off quite a bit over the last week. Amazon has rallied by around 11%. There's a lot of talk about the potential of Meta buying chips from Amazon, or Alphabet, I should say.
Yeah.
Alphabet is up 11%, and Alphabet produces the TPUs as opposed to Nvidia's GPUs. So, fair bit of competition coming in for Nvidia potentially.
Now, locally, we are expecting a strong start. How are you viewing the Aussie market at the moment?
A little bit differently to the US in that our economic data is actually relatively strong, and we're expecting a CPI number out from the ABS today, and I think
in fact, that's
the RBA
that first monthly read.
That's right. Yeah. The RBA will be keeping a very close eye on that. But I think that inflation is still too sticky there. It'll be interesting to see what the number is, but a number of the economists are suggesting that we actually get a higher number this month. I think expectations of a rate cut in Australia are probably pushed off into 2026. But overall, the economy here is going relatively well. Consumer sentiment seems to be significantly better than it is in the US. And our market has come back into showing a fair bit of value in many sectors.
Well, in fact, that's encouraging a bit of M&A activity. In fact, there's been a flurry of that as we head towards the end of the year. Most notably, yesterday we had an update, Macquarie Asset Management in its bid for Cube Holdings. I mean, that looks as though it's pretty firm now, isn't it?
Well, it does, yes. And interestingly, the board came out almost straight away and said that they unanimously accept the offer in the absence of the independent expert report. So typically boards will wait for some time before they endorse an offer, but the $5.20 seems to be a very good bid for Cube. So yes, there's been a lot of activity. Cube, we've also seen a consortium including Washington H. Soul Pattinson make a bid for Monash IVF.
Which they knocked back.
They have, at this point in time. And also, a couple of weeks ago, we saw Hello World lodge a bid for Webjet Group, and another investment group has lodged a bid for it. So, quite a bit of M&A activity creeping in.
All right. How are you sort of screening those at the moment, just in terms of the likelihood and I guess the optimum valuation? Yeah,
well, our research team have actually gone through and done a quantitative screen of the small cap stocks that we look at, and we've looked at 3 different criteria. So a 50 or greater than 50% discount to our valuation of the stock, less than 5 times EV to EBITDA for 2028, and a gearing ratio less than 25%. So looking for those companies that are trading at a significant discount to where we think they should be trading at, have got good solid balance sheets, and are growing in their earnings. So there's a number of stocks that we've identified through that process. We've come up with 7 industrial stocks and 8 resource companies that look as if they could well be M&A targets on those screenings.
All right. Among those industrials, what are the likely targets, do you think?
Yeah, well, one of them is Web Travel, which is the other part of Webjet Group. They split a couple of years ago. We think that it looks very good. Many in that travel sector, so Camplify Holdings, Experience Co. Looking interesting, and then a number of medical stocks, so Trajan Group, which is TRJ, and Vitrify Life Sciences, which is a company that came onto the market probably about 12 months ago, but is trading at a significant discount to where it's trading.
Now, also a lot of M&A action in the resources sector. Perhaps we shouldn't be surprised, given it's just the movement, I guess, of those underlying commodity prices. So, once again, what are the likely targets that you're seeing there?
Yeah, well, you're right. There has been a lot of activity, and even this week we saw that BHP are stepping away from their takeover of Anglo American. So they've got a strong balance sheet and a lot of cash. So potentially BHP might look at some smaller companies as well. But Aurelia Metals is one that we think that stacks up very, very well from that perspective. Ioneer, obviously a very volatile stock, but at current levels they're trading quite well. And then a couple of the very small ones, QPM Energy and Viridis Mining and Minerals. So there's quite a number of stocks there that are looking attractive, and we could well see some further M&A activity in those stocks.
So we have seen strength in that, in particular in the materials resources sector more recently. Interested to know how you're playing that at the moment, and also I guess balance that with what we've seen with the banks. In fact, yesterday they came up quite sharply. Was that driven a lot by what we heard from Bendigo and Adelaide? Because obviously they've had their issues there, just in terms of reporting to AUSTRAC, in terms of compliance issues.
Yeah, I think that certainly had an impact on the market, and I think more broadly we have seen a bit of selling in the banks, purely because the four majors in particular are very overvalued and have been for quite some time. So there is a bit of a shift, and as you mentioned, in Australia we have that barbell approach of the banks on the one side and the resources on the other, and we have actually seen quite a bit of money heading towards those resource stocks. Many of the gold stocks are still looking quite attractive on the basis that they're still earning very, very strongly and generating a lot of cash flow. So many of those are still reasonable. And a lot of the copper stocks are looking interesting as well. So we still think that in resources there is some further upside to be had.